Hello, everyone. It is just a thrill for me to be with you again. We are so excited today to have with us Jenny Kassan, who is just an extraordinary human being, and of course, many of you know she is an extraordinary leader in the crowdfunding, especially the impact crowdfunding space. And so we're thrilled to have her. But I'll circle back and tell you more about her shortly. But I'm going to run through a few exciting announcements before we get started. Among the things I want to share today, I want to acknowledge and thank our sponsors. You know, that this webinar is free because of the support of sponsors like Purpose Rounds. They're making such a tremendous difference for us. We're so grateful. Halyard Compliance is another sponsor, and we're grateful for our impact sponsors who really make such a big difference to us in the work that we're doing. We're grateful too for our supporting co-hosts, Rotary, Move the Needle, Amoeba, Ridgecrest Herbals, Funding Hope, and of course the Superpowers for Good. And we're grateful for our co-hosts that help promote and encourage people to attend our events. The CFPA, the Crowdfunding Professional Association, Gig Group, the Kassan Group, of course, Jenny's firm, Mashup Labs, Crowdfund Better, Community Vision Solutions, Crowdfund Main Street, and CrowdMax Publishing. We're so grateful to all of them. Today we're going to be talking a little bit about money. And, I feel like when we talk about money, we need to make sure that folks understand we're trying to provide some educational information. We're not providing you with personal financial advice. You want to get your own proper counsel for that. I'm really excited now to make a kind of a big deal announcement. We're really excited about this. We're going to give anyone and everyone who attends 10 webinars, 10 of our SuperCrowdHour webinars, starting with this one today, $100. This will be a reimbursement for you making an investment in a crowdfunding deal after you've attended 10 webinars, 10 of our SuperCrowdHour webinars. And you can details at rewards.4SC funds. But the key thing to know about this, to participate, to get credit for your 10, they're free, remember? So we're paying you to attend a free webinar. That's a pretty good deal. Please, please, please. But you've got to attend via Zoom. If you're watching right now via YouTube, I want to encourage you to go right now to visit thesupercrowd.com, pull down the menu and visit the November SuperCrowdHour page and register on Humanitics. And then you'll get the link to join the Zoom. It'll take you a couple of minutes. That's okay. And after you join the Zoom webinar, you'll get credit for being here today. And then you'll want to register each month. And in future months, we'll have you register via Zoom. And then you need to sign in using your Zoom account. You need to authenticate is the word they say, but you need to sign in to your Zoom account to get credit for attending. And if you do that, we'll keep track of everyone who attends. And if you attend 10 times, we'll let you know we've got you down for 10 webinar attendances. And then you'll get $100 that you can invest in a crowdfunding deal. We're excited to do this. If you have any questions, check out the rules again at rewards.4SCfund. And this is going to be great. Again, join us today. Visit thesupercrowd.com and look at the events page and go to the November SuperCrowdHour page to sign in. Okay. We've got a bunch of stuff coming up. Next week, we'll be hosting our monthly Impact Cherub Club. This is an informal meeting of small angel investors focused on impact. We meet every month and we look at crowdfunding deals that we can invest in. We share the duties of due diligence. We share the wisdom and work together to choose deals that we invest in. I don't touch the money. You make the investments yourselves. There's no accountability for that, but we're excited as a group to now be working together to make investments. And you are all invited to join us for that club. If you'd like to join us, we meet on the third Tuesday of every month at 1 Eastern. That's 10 Pacific. And you can visit impactcherub.com. That's impactcherub.com to join us for that. We're also just as excited as we could be for SuperCrowd Baltimore coming up in just a couple of weeks. This event is a real in-person event in Baltimore. We're excited for it. Jenny's going to be there. She's going to be speaking. She'll be giving a similar message that she's giving today, but we're also going to be talking more about Crowdfund Baltimore, a website that she and her colleagues at Crowdfund Main Street have helped to launch. So that's an exciting part of SuperCrowd Baltimore coming up in 2 weeks. Next month for our SuperCrowdHour webinar, we'll be hosting Dorian Dickinson. He is the CEO and founder of Funding Hope, and he'll be talking about building stronger communities with investment crowdfunding. This is going to be a great session. You don't want to miss it. This one is free. This is your second opportunity to get credit for attending a SuperCrowd webinar and earning toward your $100 reward. So be sure to join us for that. We're excited about that. Now, let me introduce Jenny Kassan. Jenny is really, truly, and genuinely one of the sort of real OGs of crowdfunding. She was there in the process, leading the charge to get the Jobs Act passed, creating what is now Regulation Crowdfunding, among other changes in securities laws. And so she was invited to be in the Rose Garden at the White House for the signing ceremony when President Obama signed the bill into law. She leads the Kassan Group, and she helps clients raise capital under a variety of exemptions from registration, including especially Regulation Crowdfunding. She provides both legal and consulting support. She's just a phenomenal person and specializes especially in helping women and social entrepreneurs. And I'm grateful for my association with her. She's also a principal in Crowdfund Main Street, which is a FINRA registered portal. And as I mentioned, recently launched Crowdfund Baltimore. With that, let me turn the time over to Jenny. Jenny, take it away.
Hello, thank you so much for having me. I'm very excited to be here. And what I want to share today is an approach to raising money for your business that I've been teaching for a while. And it's still something that is new to a lot of people when they think about how can I get my business funded? And I will just share that I have been an attorney helping small businesses get funded since 2006. I've also done a lot of coaching of my clients beyond just the legal part, because what I find is there's so many challenges that go along with fundraising. Sometimes we need more than just a lawyer. We need a coach and a community of support, which we also bring together. I also work on ecosystem building in the space. I am currently working on a project in Baltimore called Opportunity Main Street, to really bring together a lot of tools to support small businesses in Baltimore to raise community capital. So I'm going to share some slides. And, actually, Devin, can I ask if any questions come up, how are we going to handle those? Or do we want to save those for the end? I'm totally happy to have those come in at any time while I'm speaking.
Yeah. Let me just suggest that we ask our audience to submit their questions using the Q&A function. That just is a sign to you and me that they have a genuine question you'd like to address. And then you can answer those anytime you want, Jenny. If you want to be interrupted to address them in the flow of the moment, go right ahead. If you want to save them to the end, that's fine too.
Yeah, I'm totally happy to be interrupted at any time. It's really, really important to me that these concepts are as clear as possible because it is a different way of raising money that, like I said, a lot of people haven't really been exposed to this approach, but I've been doing it now for 17 years and my clients have raised anywhere from a few $100,000 to multiple millions using this approach. All right. So I want to start by talking about who are investors anyway? A lot of times when we think about who investors are, and of course, the people that are attending this webinar, you already know that investors are more than just the people in suits that are, professionally investing, spending all their time looking at investment opportunities. You already know if you're here that the crowd can be an investor, but I just want to go over that to make sure we're really, really clear on that. And excuse my cat. Okay, so who are investors? So, there is this thing called angel investors, and that term it can mean a lot of different things, so when some people, when they say angel investors, they're talking about individuals with wealth. They're accredited investors, so they have wealth, and they invest. They often join groups of other angels. There's angel groups. They're all over the country. There's a group called Angel Capital Association that all those groups are members of. And they tend to invest in a style of investing where they're looking for super high growth, multiple rounds of funding leading to a big exit. And of course, Shark Tank is one example of angel investors. They're often looking for, a pretty darn high return in exchange for taking this early risk. And then there's venture capitalists. They're often the second stop after the angel round. They're coming in also on looking for a very high return. Sometimes they, sort of put the early angels into a bad position because they are, they have a lot of power. They're looking for multiple rounds of funding, leading as quickly as possible to a big exit, which can happen either through the sale of your company to a larger company, hopefully at a very high valuation, or possibly an IPO. So, that's what a lot of people think of when they think of investors. And there is this concept of an accredited investor. The people who attend these calls are probably pretty sophisticated, so you probably know this, but an accredited investor is defined under federal law as an individual with at least $1 million in net worth, excluding their primary residence, or $200,000 in income consistently. Could also be $300,000 with a spouse, or if the investor is an entity, at least $5 million in assets. So according to, we don't have a super definitive estimate on the percentage of the population of the US that is accredited, but I would say it's about 10%. So when you're raising money, on that route of the venture, looking for the angels and the venture capital, you are raising only from accredited investors. But what we love to talk about is raising from everybody. We want everybody to have an opportunity to invest. And that opens up a lot of possibilities when you don't limit yourself to those professional investors like angels who are I call angels who are part of angel groups professional investors, because even though it's more of a hobby for them, it's not their full-time job usually. It's something they spend a lot of time thinking about, and they put a lot of, they make a lot of different investments. They take it very, very seriously. So I call them professional investors. And then, of course, the venture capital funds, the other institutional sources of investment funds, I call those professional investors. And we want you to be able to access not just professional investors, not just accredited investors, but the 100%, because it does open up a lot of options when you can do that. So a lot of people don't realize that already, even before crowdfunding, the majority of the residents of the United States are investors. It's about 125 million people, the last I looked, and they're very diverse. I mean, people who are attending right now, you probably are an investor yourself, even though you don't necessarily think of yourself that way. If you have a retirement account, if you have money in the stock market, you are an investor. And investors are as diverse as the population of the US. They care about different things. They're looking for different things. They are not solely motivated by making super high returns super quickly, the way the mainstream angels and VCs are. And if you look at, what percentage of the total number of investors are these professional investors that most people are going to look to for funding their business, it's only 0.3% of the population of all investors. So you're smart to show up on SuperCrowd webinars, because you know that it makes sense to tap into that 99.7% of the population of investors who are not professional investors, don't even think of themselves as investors. And that doesn't mean that you shouldn't also go for professional investors. That's great. But why would you leave out 99.7% of the population when you're looking for investors? And of course, that's what crowdfunding makes much easier to do, to include everybody. So when most startups and small businesses raise money, the way they do it is they say, okay, I need money. I'm going to go look for investors. Then they maybe they make a presentation at a pitch competition. They find local angel groups. They may look for investment funds that are a good fit for them. They don't even think about what the investment will look like. They're just like, I have to find investors. So they go to whatever lists and, ask around and try to find these investors, which are these professional investors. Because if you're looking for investors, you're generally going to, and you're Googling around who's an investor, you're looking on LinkedIn, you're looking at who's the local angel group, what VCs are a good fit for me. Those are all that 0.3% who are professional investors. When you are dealing with those types of investors, they dictate the terms of the investment. They tell you, okay, if we invest, this is how we will invest. This is how we will get paid. And if what your business is doing and the plans that you have for your business and your growth opportunities are not a fit for their terms and their model, then okay, sorry, you're not a fit, no funding. If it is a fit, sometimes that can be even worse than if it wasn't a fit, because sometimes those investors have very, very onerous terms. So oftentimes institutional lenders are going to require personal guarantees where you have to put your personal assets at risk. Venture capital style investors become your boss. They want control. So I believe that path of funding is almost always going to result in a negative, that either you'll waste a lot of time trying to get funding and not be successful because it's not a fit, because that venture capital model is not a fit for 99.9% of businesses, or you will get funding and the terms will be very, very onerous. You'll be pressured to grow your business as fast as possible at any cost, and you really won't have control of your business anymore. So what I teach is a very different approach, and that is that you, as the business owner, you design your offering, you decide what your terms are. Once you do that, then you go out and look for investors and tell them, hey, here's what I'm offering. Are you interested? Then for those who say yes, you get funding from them, and then the funding comes in on your own terms. And I know that sounds like, whoa, is that even possible? For those of you who have done, crowdfunding, that's possible, but I've seen it happen over and over. Like I said, I've been helping small businesses raise funding since 2006, and I've had many, many clients raise money this way. It's absolutely possible. So instead of VC, we sometimes call it WeC. It's the We Capital Planet, where you have an infinite number of options of how your business gets funded. You decide how it works. You don't have to be that type of business that has huge growth and an exit. You can be a business that has slow and steady growth and maybe isn't looking to an exit for a while. You stay in charge of your business. You don't lose control. Your investors often are, this isn't, I mean, it depends on what type of business you are and what investors you're looking for, but the majority of investors in the US care just as much, if not more, about the mission and the impact of your business as they do about the financial return. Many studies have shown that. Using this approach, diverse founders are getting funded. We often hear those horrible statistics about how few women and people of color are getting funded in that more mainstream approach. I mean, it's just ridiculous how low those numbers are. But raising money this way, we are seeing women and people of color and people coming from more disadvantaged backgrounds getting funding. And like I said, 99.9% of businesses are really not a fit for that venture capital style model because they're just not able to get that huge market share, grow that quickly to where they would be able to provide the types of returns that those types of investors are looking for. And so if you go and you look for that type of funding, most people will not get it. And I hate to say it, especially if you're a woman or person of color, but this way of raising capital, it will be a fit for you because you design the terms to fit your particular business plans and goals and values. So a couple examples. So I just chose a few different examples from my many, many clients I've worked with. So this was an organization that was actually a nonprofit organization that was focused on creating cooperatives. And so they wanted to raise money to start a business, a cooperative business that would grow fruits and vegetables and sell them. And so they were able to raise from the crowd by offering a promissory note. So a nonprofit cannot raise money in the form of an equity investment because there's no ownership in a nonprofit, but you could raise money in the form of debt, and the debt can be very patient. It can be, whatever interest rate you want to pay. You don't have to have any collateral. So you design the promissory note to fit your situation. So this was one successful raise. This is another nonprofit that raised money. It's a school. They raised money to expand, to build a new building on their site. They also offered promissory notes. They offered some options. So they said to their community, you have a choice. You can either invest in a shorter term promissory note with a lower interest rate or a bit longer term promissory note with a higher interest rate. So that way they were able to stagger the due dates of their promissory notes. This is a business that also grows produce and delivers it throughout California. They also offered a promissory note. This is a for-profit business. And they had a really cool model where they offered, instead of cash interest payments, they offered payments in the form of credits toward their product. So their customers invested, they put a flyer in the box and they said, hey, you can invest in this green loan program. Their customers invested and they earned interest, which was paid in the form of credit toward the product. This is a business in Port Townsend, Washington. It's like a general store. They raised money in the form of equity. And what they wanted to do was to have broad-based ownership and control of the store because it's a very much of a community-based store. So they sold common stock with voting rights. So they ended up with, I think, about 1,000 investors in their community. And the investors actually have voting rights. They meet annually. They elect the board. and they share in the profits from the business. Cero is a business in Boston. It's also a cooperative. They do composting. They offered preferred equity with no voting rights, where they pay a preferred dividend to their investors, but the voting is kept with the workers because it's a worker co-op. So you really want to make sure the workers stay in control. Hungry Jack's General Store, this is one I worked on recently. They raised several $1 million. They did a crowdfunding campaign under Wyoming law. So they didn't do a national crowdfunding campaign, just a Wyoming crowdfunding campaign. They raised several $1 million to buy this store, which the owner was, retiring, and it's a beloved store in their community. So they got the community together to buy the store. And this is another one where everyone has voting rights. This is an investment fund that I worked on. So it's actually a nonprofit. It's a nonprofit organization that has many programs that it does. It's called, the nonprofit is called Community Ventures, but we did a fund out of that nonprofit, and we raised, using crowdfunding, we ended up raising a total of about 1.1 million and invested it in 13 different social enterprises. And we did offer a promissory note because it is a nonprofit, and it's a revenue-based debt. So what we do is every year we look at what comes in from our investees, and then we take a percentage of that and pay that out to our investors. And we have, I think, 135 investors. And they are very supportive and patient. We actually have had a few failures thanks to COVID. But our investors are still incredibly supportive. In fact, a lot of them end up donating their interest payments back to the nonprofit. So if you want to raise money this way, I really think you want to do a 3-step process. And, it might seem a little bit obvious, but I think it's important to just make it clear that a lot of people put the cart before the horse. You don't want to start with the raise, oh, I'm going to go out and find investors. The first thing you want to do is create a plan. And I'm going to tell you how you create your plan, because if you have a really good plan, it's way more likely that you will be successful. So you spend some time creating your plan, and I'm going to share how to do that. Then once you have your plan, you do need some legal work done. And there's 2 big pieces of the legal work. One is creating your investment documents to reflect what is it that people are actually getting. And then there's the legal compliance, the securities compliance. So I'm going to talk a bit about that in a second. But you want to make sure you get those done correctly before you talk to any investors, because there's some legal compliance strategies where you cannot talk to investors until you have that work done. So once you've completed that, then you can go out and raise money, and you can be really comfortable that you've thought through a great plan. And it doesn't mean you can't pivot a bit along the way, but you've really taken the time, you've, done some preliminary steps so that once you start raising, it goes smoothly. So I teach 6 steps to create your plan, and they're not totally linear. You'll often kind of do one and then go back to another one and then go back to the first one. They kind of all work together as a complete set of puzzle pieces to really make sure you have a great plan. But I think of them in a 6-step process. So number 1 is getting clear on your goals. And this is where you really think about, like, what are my goals for the business? Do I want to try to be a super high growth business where I'm pushing to have a big exit at any cost as quickly as possible? Or would I like to be able to be a little bit more slow and steady, maybe have an exit someday, but not be pushing for that ahead of every other goal I have? And are there values that you want to be reflected in your business? Are there things that are non-negotiable for you about your business? So getting really clear on all of that, and, stick to that. That's important. There's no point in raising money if you have to compromise on the things that you most love about your business and that make you most excited about your business. So the second step is identifying your ideal investors. And this is where we really think outside the box. We think outside of that 0.3% professional investors, and we realize just about anyone can be an investor. And we think about who is most likely to be excited to invest in our business. And we don't want to leave anyone out. We don't want to make assumptions. I've definitely seen people say, like, oh, I'm not going to ask so and so because I don't think they have a lot of money. And then find out, oh, that person actually did have some money and they did want to invest. So you don't want to leave anyone out. If they don't have a lot of money, let them be the ones to say no. And of course, that is very dependent on your legal compliance strategy. Who can you ask? But when you're thinking about your ideal investors, think broadly. Think not just people you know, but people you could know. So, for example, if your business is something related to improving environmental quality, think about organizations that are passionate about that same thing that you work on. And attending, you can be attending meetings of those organizations, getting to know people, anyone who's passionate about what your business is all about. Of course, your customers or potential customers, these are all potential investors. Number 3 is designing your offering. And this is where we do get into kind of more of the legal piece where we say, okay, what is it exactly that you're offering to investors? Is it equity? Is it debt? Is it a safe? Is it a convertible note? You want to decide what it is you're offering and what are the details of that. Like if you just say equity, that is not specific enough. There's so many different ways of designing equity. There's equity where you pay annual dividends. There's equity where you have a slow exit based on redemption of the equity. There's equity with voting rights. There's equity without voting rights. So you want to be really specific about this and fit it to your goals and values and plans. You all want to have a legal compliance strategy. So, in the US, if you're offering any kind of investment opportunity, you have to really make sure you are clear on your legal compliance strategy. I see people messing up on this all the time. You want to take the time to understand your options. There's many, many options that allow you to include everybody, options that allow you to publicly advertise. Of course, regulation crowdfunding is great because you can publicly advertise. Anyone in the United States can invest. There's you can have a large number of small investors, open it up to everyone, but there are other options as well. So you want to really make sure you're clear on your options, pick the one that fits best, and then stick to the rules around that one. And like I said, you don't want to be talking to any potential investors until you're clear on this part. Okay, design your outreach strategy. So this is going to be somewhat based on the previous steps. So depending on which compliance strategy you chose, that is going to affect your outreach strategy. But really, a lot of times your outreach strategy is going to be similar in the sense that the main way to reach investors is just to talk to everyone you know. Whether you can publicly advertise or whether those have to be private conversations, that will depend on your compliance strategy. But the more people you talk to, oops, and I see I misspelled the word outreach. The more people you talk to, the better chance you're going to finally connect with your ideal investors. And of course, there's different things you can prepare to show them. You might want to prepare a slide deck, things like that. But those things aren't as important as just really committing to talking to everyone about what it is that you're doing. Number 6, we call this address obstacles head on. And this really has to do with kind of the mindset issues that can come up when you are raising money. I've noticed it many times, both with myself when I've raised money and with my clients, that some fears can come up, feeling like, oh my gosh, I can't ask anyone. Who am I to ask for this? Oh, what if I lose everybody's money? Like there's just so many mindset issues that can come up, and we've all been raised with different beliefs about money and our worthiness to ask for money. So being as prepared as possible for what might come up as you are raising money and having tools to address those things that might get in your way is what this one is all about. All right. So that is my presentation. And I would love to see if there are any questions.
Jenny, I've got some questions for you. I think we'll get some more questions from the group, but I want to just jump in and ask you a question or two myself. You hinted at the top of the discussion that raising venture capital, this traditional path, so many focus on angels, venture capitalists. You kind of said it's harder. You just sort of slipped this in. It's a little bit harder for women and minorities. I wonder if you would just expand on that and the implications and the lessons we're seeing in the crowdfunding community.
Yeah. I mean, the data on the success of women and people of color raising in the venture capital space are very disheartening, and they're really not getting better. Depending on what data you look at and who you're including in the data set, there's different numbers. So I don't even want to, we'll say it's, maybe 2% of the money is going to women, maybe 0.5% is going to women of color, something like that, or people of color. I can't remember. I hate to say numbers because I've heard so many different numbers, but it's incredibly low and it's not getting better. Whereas with crowdfunding, some of the data are showing that women and people of color are actually doing better in terms of succeeding in reaching their goal. Unfortunately, the amounts they're raising seem to be lower. But they are at least, they are having more success reaching their goal on average. So that's very promising. I mean, obviously, there's still a lot to do about kind of implicit bias when all investors, all humans have some bias when it comes to thinking about like who is likely to be a successful entrepreneur, even though there's so much data that show that women, tend to do better as business leaders and provide better returns to their investors. There is this implicit bias where people have an image in their mind of who is likely to be a successful entrepreneur, and that will play out, unfortunately, both in the VC space and in crowdfunding. But because you can reach more people in crowdfunding, and because a lot of people who come from more marginalized, discriminated against groups have developed a lot of skills around like community building, sometimes, it can end up working in our favor.
As you think about the challenge of raising capital, it's really daunting. And in the early stage of preparation, it's easy for a capital raise to start to feel like eating an elephant, right? And of course, the old adage is, you eat an elephant one bite at a time, right? You can do it. It takes a while. And that's a bad analogy because I don't eat elephants. Nobody should eat elephants. I don't think anybody does. But listen, if you were trying to give someone a little bit of encouragement to start down the path, walk us through some of those early bites. What are some of the first things we do to get just a little bit of progress, feel just a little bit of momentum, and to make us feel like, oh yeah, I can do this?
Yeah. Yeah, I mean, what we advise our clients to do is to create a list, as big a list as possible of people to reach out to, and just really commit to having a lot of conversations every single day, and also getting comfortable with the ask. Like, I mean, you might ask 20 people easily and they might all say no. But guess what? Every time you have those conversations, if you're not letting negativity take over, like, oh, it's hopeless, like if you stay positive with each of those conversations, you're getting more and more comfortable with the ask. It's coming out more clear. You're learning kind of what resonates with people. So just keep asking, and you have to really ask. I know a lot of people who will talk to potential investors and they just cannot get the words out of their mouth, would you like to invest? It's very scary for many people. I've been in this position too, where just those words will not come out of my mouth. We'll have a whole conversation. Oh, I'm doing this great thing. It's so awesome. Do you have any advice? But would you like to invest is a hard set of words to come out of your mouth, but just get the words out and then immediately be quiet. Some people want to jump in. Oh, but I know, you may not really be able to, and that's okay. Just be quiet. Let
Boy,
there
that is
let there be a
that,
pause.
yeah, it's such great advice. We, as adults, we just hate to fill the room. I was watching a 14-year-old teach a lesson the other day, and he was doing such a great job of just letting the silence sit there while his friends pondered the question. And I thought, man, adults never do that. We always say, oh, well, it's okay. Let me explain my question again. And yeah, so that's great advice. Great advice. Let that question sit there for a minute. As you think about your work coaching, social entrepreneurs, nonprofits, and women and minorities, you've done some amazing stuff to help a lot of people. What are some of you shared some examples of successes, but as you think back can you think of like someone who really struggled and ultimately was successful? And tell us about how they overcame those struggles.
Yeah. I mean, so many. There's one that was a really cool one. We started a platform called crowdfundmontana.com, and we had a client that was in Troy, Montana, very small town. And it's these two really cool women who noticed that there was a big bear problem in their town. The bears were attracted to the town because a lot of people had apple trees, and the bears would eat the apples and get drunk on the fermented apples. And so they were like, what could we do? So they came up with this idea to pay people to pick the apples, bring them to these women, and they would have a distillery. And it's called Pink Bench Distillery because there's a pink bench in front of the building where they were doing the distilling. And they were just so passionate about this. And in this town of Troy, Montana, like no one really had ever thought of investing locally before. But people just so loved this idea, and they worked really hard. They had moments where they were very discouraged and felt like it was never going to get anywhere. And honestly, a lot of it was the prep work of just getting up on the platform. Sometimes that can be a lot of work. And then, by that time they were kind of tired. It's like, oh my God, we've been working so hard to get up on the platform. But they just were so persistent. They talked to everyone in their community. It was a nationwide offering, but really most of the investors were from their community, and they just were so persistent. They did everything they could. They hosted events. They had one-on-one conversations with people face to face, and they did end up, reaching a goal. It wasn't probably the highest goal they would have liked to reach, but they did reach like a decent amount that allowed them to take the next step with the business. So that was just really beautiful to watch. They, as Michelle, my business partner, says, like they taught a whole town how to invest locally. And I love that story because we can all do that, we
Yeah.
can teach our community how to invest. When you're raising money using crowdfunding, it's not just a selfish thing like, I want to raise money for my business. It's like, no, you're part of a movement. You're helping people relearn something that we used to do, hundreds of years ago. That's what we did. We invested in our own communities. And because of the growth of the financial sector becoming so professionalized, and regular folks being blocked out of investing by so many complicated laws, like we need to relearn that skill. And I'm so grateful to you, Devin, for all you do to grow this ecosystem. But everyone who's raising money using crowdfunding, you're part of that relearning, that education, where we can all become investors in our own communities. We don't have to send our money off to Wall Street, or at least not all of it.
Yeah, that's Jenny. You're so right, and it's so exciting. This example you use of the Pink Bench Distillery is just such a great example. One of the things I love about this story is I think of it as kind of an impact trifecta. We have women, so you talked about this. Venture capitalists are giving something like 2% to women-led companies. Holy cow! So when I talk about diverse founders, women are certainly diverse founders in a world where they only get 2% of the venture capital. When we think about social impact, we think about the community and their interactions with bears, and the result of interaction with bears is the bear usually ends up getting the short end of the stick. Rarely do bears actually hurt humans, but the risk that they might hurt a human often leads to a very bad outcome for the bear. And I have a lot of compassion for bears. So there's a genuine social impact here that's at stake, right? Caring for the community, the critters in it, and
Also
making the
creating
people
local
safe.
jobs, not
Yeah,
just,
yeah,
people getting paid to gather the apples.
yeah, and then that's kind of the third aspect, right? Is the local community benefit. The community benefits from investing in this, and so we see kind of the impact trifecta here. And when I start looking for these, they're not hard to find. I suspect as you look at your career and all the people you've helped, I would bet many, maybe half, maybe more than half of the companies you've helped, you could say, wow, trifecta, diverse founder, social impact, community impact. I mean, that's pretty great. Wouldn't you agree that a lot of your clients have fit that mold?
Yeah, almost all of them, I would say, at least a bifecta, because
Yeah.
sometimes they are not necessarily what we would consider diverse. We do work with some
Yeah.
white men, but other than
Yeah.
that, they they all have multiple positive impact. I mean, even just by bringing the community in as investors, that already is a positive impact. And then there's all these other ones that are part of their business model. I'm just constantly amazed at how many people are starting businesses that have such a positive impact, but also do have the potential to, generate sufficient positive cash flow that they can also pay their investors while also caring for all stakeholders.
Well, Jenny, I want to thank you for taking the time to be with us to present today. You have spent years honing this expertise, and I'm grateful that you would share it so generously with our community. I know you have a passion for impact, a desire to change, a desire to accelerate this community of impact investors, the impact crowdfunders. And I'm so grateful for the energy you bring to this community. And thank you for the time that you've spent with us today. I want to thank everyone who attended, including those who watch this recording later. Thank you. I invite you to consider where and how you might share this with someone else. The YouTube link is readily shareable, and I encourage you to help others in the community feel and learn from Jenny the things that she's shared today. So again, I want to thank everybody for taking the time to be with us. And again, Jenny, thank you. With that, I think we can adjourn. Chandon, thanks for all of your help today. If you want to go ahead and end the webinar, you can.